What's going on, my design dude and dudettes? It's John, your stay-at-home designer. Today is a beautiful, beautiful Tuesday. We're getting ready to see what the market's up to. I'm actually going to take you through some live trades. There's a key one I'm looking at today that looks awesome, so we'll go through that together and see how it goes. But I just always want to start by letting you know you came to the right place. My passion is to help you pursue and enjoy your passions. So, without further ado, let's get into this one here. And as usual, these are for educational purposes only. Always know and understand your own risks. But whenever you got questions, I'm definitely happy to help you out from an educational standpoint. You just need to know that you're always taking your own risks. The markets are inherently risky, and you should always pursue the advice and help from a certified financial advisor. But without further ado, let's see how we're looking. So you can see SPY today. It's so, just another trading day. It's kind of quiet. Definitely not as much volume as yesterday. But the big one going on right now is Amazon. They've got today's Prime Day. Usually Prime Day is in like June or something, but due to 2020, let's say, that is now delayed. And so you can see Amazon kind of ran up due to this. And we even gapped up quite a bit. We broke sort of what seemed to be like some resistance style levels. And now there's two things coming up. So there should be earnings, I think, next week, the 22nd or so. So that's about a week from today. And also because of Prime Day, we had this run up. I have a theory that we're also running up due to other things. There might be another announcement around earnings, but you can see these guys just have had insane earnings. From, if you can see where my mouse is right now, we basically went from like $5 a share to doubling that in terms of their earnings. And there's been a lot going on this year with some caca insano moves, like splits, SPAC companies, just, different run-ups that I think Amazon's going to try and take advantage of this. That's my theory. So I'll make another video on that in the future. But let's kind of go to the options chains and see what we're working with. So I said I was going to be light on positions going into the election and everything, and apparently I'm not. But I do like some of these scalpy style plays. So my target is to kind of go risk off as soon as I can. So I'm looking to maybe target a week in trade, maybe two, give or take. But I certainly don't plan to be holding all positions that I'm looking at coming up here. So here's Amazon. I'm looking at the November 20th strikes. So basically you'll see it's 38 days to expiration. And what we'll do, here the put side, and then here's the call side. So basically on my put side, I'm going to first look at maybe a put credit spread and kind of see what I'm taking in for that and see if it's worth it. Let's see. Okay, I'm going over the 27 delta right now. So 30 40. I'll go 10 wide. And right now this is saying I can take in a credit of 217. And that's basically like the multiplier is 100 on the contracts. That's basically 100 shares. So this is saying my max profit would be like 215, 217, but my max loss about 785. So generally that's a ratio I'm not too happy with. The probability of profit's great. Everything looks okay on that end, but let's try something different. So I'll go up in delta. I want to collect more. I have more of a bullish bias on this stock in general. So let's just see what I'll take in for credit here. I do like... we went from like 205, 215 to about 31, 35. Okay. So not... 300. That's okay, I guess. So not too bad. Let's look at that. All right. So as a as a credit spread in general, this looks okay. We're saying we're basically making a bet. Okay, 31.50. We do not want to exceed the stock price here. Right now, Amazon's trading quite higher. We're at 3,444. So this is basically saying that, hey, this has to drop almost like 300 points by expiration in order to really lose on this bet. It's an okay bet. I'm not too crazy. Let's see. So 307. So we're looking about 0.42. Yeah, that's okay as far as your risk reward. Generally speaking, if I'm above 4, like 0.4, that is very reasonable. But one thing I need to pay attention to is my probability of profit has dropped a little bit. Still being at about 70%. That's pretty clean. I'm happy with that. But there's a couple scenarios I'm going to look at now. Is I do feel that there's a possibility we trade somewhat neutral. Previous high was 3,550. Let's just see. Let me go above now. So I'm going to look at the call side here. And, okay, so let's go here. Let's say like 3680 and 3690. So this now changes our profile, you'll see, right? Our max profit has gone crazy higher, and our max loss has dropped now. Instead of us potentially losing 700, we're now looking at a max loss of 395, which does fit better in what I usually like to do. Typically, I highly recommend you never set your max loss to go above a certain threshold in your account. And for me, I never want to exceed 5%. I usually try and stay around 2 to 4. But never, if you see a good opportunity and you think it's great, if you're going past a max loss of like 5% of your portfolio, you're making mistakes. Eventually you'll lose, and that hit that you take to your portfolio will sort of, it's almost like taking 2 steps back, right? Like you take 1 step forward, 2 steps back, 3 steps back. It'll almost take you multiple contracts to make that up. And then what happens psychologically is really poor traders, they start to make poor decisions, and they think, oh, I got to make up for that. I got to make up for the next loss, and so on. And by doing that, you start getting well above your max loss scenario. And so you always got to be careful of that. Let me mess with this a little more. Let's see what we're looking at. So 605, 595. So as I'm looking here, previous high, right now we're trading at 3,450. So 3,450. We're about 100 points up at 35.52. And now at this, we're at 36.90. So it's about another 150 points above the previous high. That's pretty good. I do like this trade. This is something I'm willing to consider. And since I am bullish, this does give me some space to run if we have to. So 34.50, good. However, I don't like the credit right now. I'd much prefer a better credit profile. So 615. Yeah, let's try this at like 610. Let's see if we get filled. So basically, we're at the 3680, 3690 calls, and then here below we're at 3150, 3140. We're trying to pin that max loss 390, max profit quite high at 610. And I am very happy with that. I'll even go to 605, okay? And let's see if we get filled. So we'll submit. And no fills so far. Generally we can wait a little, but since I am being impatient right now, I'll actually drop this to 601 really quick. And if we get a fill, it will tell us. But nonetheless, I do like what we're looking at here. So 399, 395 max loss, give or take. And if I do want a really speedy fill, I can go lower. So if I go below 600, maybe to like 590 or so, I'll likely get a fill here. But let's just kind of talk about what we expect in this. So as I do an analysis here from a curve standpoint, we're basically saying this red flag is the current stock price. We're essentially saying, hey, we want to stay somewhere in this realm of trading. So if Amazon can stay here, then we are looking good. Those are kind of our zones to look at. And what will happen is, let's go delta. Okay, now some good and bad is there is a pretty high expected move. So that's one reason I sort of don't want to chase this stock too much. Another potential that we can consider is just going one-sided. So maybe if I'm really, really bullish, I might actually move these puts away from the 3150 level. I might go up to like say 3200 or so. And then I'm just making a bet that, hey, I don't want to see Amazon go like 200 points lower. We will see. Like I said, the market has a lot of frothiness associated with it right now, so it does make it so I'm a little more nervous as to what we're looking at. But you can kind of see here. Oh, it looks like we did get filled. So we got filled at 601, and that does look okay. So let's see how this trade plays out. I'll keep you updated in the coming weeks, but my main goal here is to target at least between 30 and 50%. So to give you an idea, I can click here, you right click, and it's pretty neat. You can say, okay, close profit at a percentage, and as I put 50%, it now just automatically puts it in, good to cancel order, and I'll just submit that now, so it's in place. And essentially, each day I can kind of monitor this and review, see what we're looking at, and see how close to target I kind of am based on the mid-price fill. So that'll do for now. I'll give some updates if more trades pop up for me. But like I said, I'm getting kind of to a point where my allocation versus risk versus what I'm expecting, with the presidential situation going on, I don't want to be too exposed. I want to save some money in case the volatility picks up quite a bit. So we'll move from there. We'll see what goes on. But like we said, I hope you understand that there's always risks with options. I'm just showing you kind of what fits my profile. It definitely may or may not fit yours, but nonetheless, these are for educational purposes only. So I do appreciate you stopping by. Thank you, my dude and dudettes, and I will see you on the next one. Bye-bye.